Welcome to TradeTheNBI.com. This is John. This report is for the 21st. And finally, Martinacci 100% meets price. We've had a flattened gold to slightly lower, even as we've been above these levels. Will this finally generate a little bit more back and forth? Well, we've had plenty of back and forth, I think, from a volatility standpoint. The nice thing about it is you've seen a lot of resets of short-term buyers, in the sense that if you want to call the Fed a short-term buyer, they're short-term, long-term. I mean, that balance sheet is through the roof. But it doesn't really matter, because pretty much worldwide the same situation is taking place, which is an interesting aspect. The question is, how do you move back from government income to private sector income? And this is going to be the challenge going forward. Some states have been doing fairly well, and I think the disparity starting to represent itself pretty starkly in those that have started to make a move back versus the ones that haven't. I think you already saw some political rumblings from it, which the market will start paying attention to very soon, particularly as you get closer to Democratic convention and what that's going to look like. You already saw some smaller races move towards Republican side. Don't know if that has any broader impact yet as to whether or not there's a frustration of the slowness of response in some of the blue states. So that's going to actually be a significant factor going forward, because you're really going to get an emergence of this back and forth of supply chains not completely functioning. And I think that's going to have a bigger effect on the markets. And the question will be, how far will the Fed go? Are they going to go to a $10 trillion balance sheet or higher? And if they slow down, what number are they willing to go to? Are they going to maintain this well above the 20, I think probably 2,500 is a little bit on the low side, but I think that their intention is to maintain it closer to 3,000, if not higher, going in through the election. It's been probably the only saving grace under normal conditions. You would have had massive drawdown in stocks and that, which would have really created a huge problem. The interesting aspect of this is going to be in credit, with banks coming up very shortly now. They've done all their forbearance and stuff. Are they going to extend those? Are they going to end it? You have massive amounts of theoretical credit card and mortgage default for the forbearances that have taken place already for 60 days. You're going to move to 90, 120, in which case most people would consider those well into default. It's going to be it's an interesting situation to play off. And then you have the tech here with the NASDAQ. Are people going to be buying Apple products? And we know they're still consuming Amazon simply because it brings products to your door. So I would imagine they're going to continue to fare. But if technology, will they be able to keep the supply chain moving along? Will people have the resources to buy the next new phone that does the same thing that all the other phones have done before, but has like a better camera or something? I know they've moved into the services aspect of it too, which is important for them, because they're going to need to flip to be able to maintain growth in any way, shape, or form. And of course, the euro back and forth with it, and that just helps the S&P. So a rising euro is actually going to improve S&P prospects. And oil, literally continuing its surge, and this is going to become problematic soon. You're right in the kind of middle range. I know that Midwest states that do shale and fracking would like to see this still above 50 or 60 to prevent systemic layoffs and that going forward. This really is going to become a demand question, and how fast that returns. I mean, do we see a massive drawdown of stockpiles now that businesses have come back? And that report will definitely drive the market over 3,000. If it proves to be a significant drawdown in oil, it would mean significant growth. And this is what real market players look for, and they're checking this kind of data nonstop. Now we see it and the effect of, what we would call short-term, DOC, cyan, steel and green buyers. More likely than not, too, you would see shorts fading out of that kind of situation. So we would see the cyan dipping dramatically. And of course, gold breaking new highs, and that's going to just continue. It may not be in dramatic super swoops or anything like that, but as you get this indication that there's this building inflationary pressure and or instability in fiat currencies, that's just going to continue to compound itself. So we started off big up move, even with the brief BK signals that were taking place at all on full steel resets and produced turnarounds fairly quickly within the overall move, and pretty much stayed consistently above their 50% lines and went to new highs, what I would consider relatively boring until the later part of the day, where we started to actually get some movement. But it's still decent ranges. I don't think you can complain when you're talking about 15, 16 points from a top to a bottom. It doesn't sound like as much these days, but in a normal time frame, that would be considered a huge move. So it's been really good stuff. And when we get these decent buy signals, but without that steel reset, you can see the effect of it. It becomes just a stagnation rolling across, and then you might get a pump that takes you up, but then it creates that reset. And once you get that reset, then I start to look for a little bit more extended carry moves. And in this particular case, it did break its to new highs after a little bit of ABC action. And once it did that, it did it with, a couple of dips below the red line. It had been filled, but then created new ones. And they just fill those in after hours, clear the stops, take out the positive extremes from earlier, and rinse and repeat. And we're effectively the same spot we were. Just the beauty of it. And it's lovely to take advantage of that. I just wish I could get rid of my sinus issues. It's been horrible this year. I don't know if it's been from being, cooped up, but I've been out just the last couple of days, and it's been a little breezy and stuff, but my face is sort of like, giant bubble, which doesn't bode well for the headache, but we'll keep going. Trying to take my antihistamines and that, but let's see if it can have an impact. But either way, we're going to be able to follow this market, and it's going to continue to gyrate. I just don't see it moving a whole lot outside of range yet, but we might start to see some of those by the end of the month. Everyone who said sell in May and go away, no. Well, we'll see. It's still May, so theoretically they can continue to sell within this range. But given the support that we've seen underlying, significantly higher is not out of the question, as bizarre as that sounds. As always, trade well. We'll talk again later.